for those MSPs that are thinking about the next step or outside investment or an exit, you got to balance profitability and growth. The days of cheap free money are gone. We're never going to see rates the way they were again. And investors out there, venture, private equity, JICs, that balance is really critical. So, you want to chomp at rule of 40 or target that. You keep balance in there. Again, a lot of traditional MSPs probably aren't going to see that unless they're targeting those versioning areas like the vCISO stuff.
Right.
You want to live at the upper end, make sure to balance. Try to get your 10 to 20% net income. You really try to, at a minimum, and then try to drive 10 to 20% growth, right? And if you want to be a growth company, you got to push those metrics up.
I love that you mentioned that ratio. I don't have it handy, but we kind of live in this 7. Like that's the Bering McKinley. It's our 37. We got to either hit 20% growth and 17% net or some combination, but that number better be fucking 37 or higher every year, or else we know we're doing something wrong. So
That's right.
Yeah.
And I'll tell you this, there's been some studies, Josh, that basically once you get over 20% growth in like IT services, it doesn't really affect your multiple. It really starts to fall off, increase in multiple. So for those listeners that are thinking about this stuff, living in that 20% range if you start sacrificing EBITDA for growth at that point, I would think hard about driving more EBITDA if you can. And moderating growth in that area.
Yeah, hell yeah. I never thought about there being kind of a point of diminishing return on that. So that's cool. You don't sacrifice too much net profit just to get another 5 points of growth if you're already above the 20%. Okay.